Have you ever wondered why some people seem calm when the stock market crashes, while others panic and lose everything they've built? Maybe the difference isn't luck. Maybe it's intelligence. But not the kind of intelligence that comes from numbers, charts, or PhDs. I'm talking about something deeper. The emotional intelligence of investing. That's what Benjamin Graham, the mentor of Warren Buffett, called the intelligent investor. And today, we'll explore the timeless wisdom behind his ideas, not through formulas, but through the mindset that builds true wealth. The real meaning of an intelligent investor. Graham begins by redefining what it means to be intelligent in investing. It's not about being the smartest person in the room or predicting tomorrow's prices. It's about discipline, patience, and emotional control. The ability to stay rational when everyone else loses their mind. He says, the investor's chief problem, and even his worst enemy, is likely to be himself. Imagine two investors, one who reacts to every market swing with fear or greed, and another who views every downturn as an opportunity. They might buy the same stocks, but their results will be worlds apart. Because success in investing isn't built in the market, it's built in the mind. The two types of investors. Graham divides investors into two, the defensive investor and the enterprising investor. The defensive investor seeks safety and simplicity. They focus on long-term stability, often investing in diversified index funds, keeping costs low and avoiding speculation. The enterprising investor, on the other hand, is more active. They research deeply, analyze companies, and find undervalued opportunities. But Graham warns this approach demands time, effort, and emotional resilience. Both paths can lead to success, but only if you know who you are. Trying to act like an enterprising investor when you lack discipline is like trying to sail into a storm without knowing how to navigate. The concept of value and the margin of safety. At the heart of Graham's philosophy lies one simple idea: value investing. He believed that every stock has two prices, the market price and the intrinsic value, its real worth. The intelligent investor's job is to buy when a stock's price falls below its intrinsic value and sell when it rises above it. But how do you protect yourself from being wrong? That's where Graham's golden rule comes in, the margin of safety. It's like driving with a buffer zone. You don't invest assuming everything will go perfectly. You invest knowing mistakes and surprises happen. So you build a cushion, a margin between what something is worth and what you pay for it. For example, if a company is truly worth $100 per share, an intelligent investor waits until it drops to $70 before buying. That $30 gap is your safety margin, your shield against the unknown. Mr. Market, the metaphor that changed investing forever. To explain market behavior, Graham created one of the most powerful metaphors in finance. Imagine you own a small business with a partner called Mr. Market. Every day he knocks on your door offering to buy your share or sell his. Some days he's wildly optimistic, naming a high price. Other days he's depressed, offering a bargain. Your job isn't to follow his mood swings, it's to take advantage of them. When Mr. Market is euphoric, you ignore him. When he's pessimistic and fearful, you buy from him. Because his emotions don't reflect reality, only temporary madness. This metaphor teaches a powerful truth. The market is there to serve you, not instruct you. You are not required to react to every price change. You only act when opportunity aligns with value. The role of research and rationality.
Graham insists that investing should never be gambling. Speculation, buying just because prices might rise, is like playing a game where the odds are stacked against you. Instead, he urges investors to think like business owners. When you buy a stock, you're buying a part of a company, its products, its management, its debt, its potential. He says the essence of investment management is the management of risks, not the management of returns. Real investors don't chase excitement. They chase clarity, consistency, and control. The power of emotional control. Graham's greatest insights is that emotional stability is far more valuable than analytical skill. He writes that during bull markets, even fools look like geniuses, but only the disciplined survive bear markets. When fear rises and everyone sells, the intelligent investor stays grounded, remembers their plan, and sees opportunity where others see doom. Warren Buffett summarized Graham's idea perfectly. Be fearful when others are greedy, and greedy when others are fearful. Investing is a psychological game. Graham's book isn't just a guide to stocks, it's a guide to human behavior. He understood that the biggest danger isn't losing money, it's losing your mind when money moves. He invites us to shift our perspective from chasing quick gains to building lasting habits, saving regularly, diversifying wisely, and trusting time more than timing. Investing, at its core, is a lifelong relationship with uncertainty, and only patience and rationality can sustain it. Building wealth the intelligent way. Graham's wisdom has shaped every great investor since his time. He didn't promise instant riches, he promised enduring wealth. Wealth built on reason, not emotion, on understanding, not prediction, on patience, not panic. He reminds us, the market will fluctuate, the world will change, but the principles of intelligent investing, discipline, analysis, and emotional control will never go out of style. So the next time the world tells you to act fast, pause. Think like an intelligent investor. And remember, sometimes doing nothing is the smartest move of all. If this story made you rethink how you see money, risk, and patience, share it with someone who might need to hear it today. And if you'd like to keep exploring the timeless wisdom hidden in the world's greatest books, don't forget to like, subscribe, and leave a comment with your thoughts. Your support helps FROMBOOK grow, and together we'll keep uncovering the ideas that make us wiser, wealthier, and maybe a little more intelligent.